Namaste friends, this is Kaira once again and welcome back to the Fund Managers View Show at Emkay Investment Managers. Today we have with us Mr. Kashyap Javeri, Head of Research and Fund Manager at EIML. Welcome Kashyap to the show.
Thank you so much, Kaira.
How are you doing today?
Doing good.
Great. So Kashyap, we've had indications of 2025 towards the end of 24. What is your take on the markets in the new year?
So Kaira, it's a fact that the growth is slowing down. We have had first half of this financial year which was not so great in terms of earnings growth. However, we remain quite optimistic about the fact that some of the negative factors which impacted the earnings as well as GDP growth last year, or let's say first half of this financial year, some of them are probably dissipating. The intensity is going down. The positive factors are coming to the fore. To name a few, if you look at this year, agriculture, which is one of the pain points at some point of time for us, or rural, which is a pain point for us at some points of time, this year it should be firing on all cylinders. We have data indication coming from the Rabi crop, the Kharif crop sowing season, and the advance estimates for the Kharif crop production. We have Rabi sowing, which has happened really well. We have people, at least for the first 9 months, asking less jobs under Manrega, which is always one clear indication of rural doing very well. And overall rural wages are also going up, right? So overall rural should do pretty well for this calendar year 2020-25. Urban, I think, should be modest after a fairly strong growth for last about 2.5 years, but I think even at a slower growth, it should contribute well to the overall economy. So positive indicators are coming back. If you look at the third, or rather the second part of this whole piece of puzzle, which is the capital goods or capex, for the first half, because we had a lot of elections, we had general election in 2024 June. We had some of the state elections, and those states are very large ones, right? They contribute almost about 14 to 15% of India's GDP, right? So you have Andhra Pradesh, you have Maharashtra, you have some of the eastern states which went into elections, and overall capex obviously sort of slowed down because of the same. That number has also started picking up. So we have about 2 or 3 capital goods company who have announced their results. We can clearly see that the order book has now started, or rather order inflow has started coming back. I think overall versus 2020-24, 2020-25 is going to be slightly slower because of the base effect also, but it's going to be still pretty strong if we compare with whatever we are going to see in terms of growth world over. So we are going to be the fastest economy in the world on the growth side. We have been highlighting this now for almost probably about 12 to 15 odd months, or rather about 4-5 quarters, that valuations are a pain point, right? Today, if I want to find, let's say, in 2020-22, when we started ENVI, it was not so difficult to find 20 stocks which were at the right, or rather the very reasonable valuations where you could make money on all 20 of them. Today, probably versus 20, I may be able to find probably 4 or 5 of them, not as many because of the valuations. So that continues to remain pain point. As a fund manager, my job is to find those 3-4 stocks which even at today's price are available at great valuations, and buy those. So I think 2024-25, this calendar year, we as an investors are going to make decent money again. I have absolutely no doubt about that. And the recent correction which has happened since September 2024 until probably January also gives a very very good entry point to the investors who probably have been left out or who want to actually add more to their positions, right? So I think we all are going to make money, a decent money, and it's my job to find those 4-5 names in this year who can make you money better than the markets.
Absolutely, Kashyap. So you have been watching the markets for more than 2 decades now.
Yep.
And with this recent correction, like you mentioned, when do you see things going back to the growth path?
Okay. So very smartly you told all the viewers about my age, right? So I have more than 2 decades of experience obviously in the market. Like I said, this correction which started happening since September 2024. Today, if you look at the general markets, they are down about 12 to 14%. Fortunately, if I look at ENVI, which is my strategy, our ENVIs are down much lower than that, even after this very sharp correction across the board. In fact, some of the small and mid cap we have seen corrections happening up to about anywhere between 30 to 40%, right? So far till date, we have been able to deliver about 22% kind of TWRR on our strategy, which is almost about 11 to 12% outperformance over the benchmark. I think if I look at over next about 12 months, this could be a good starting point for somebody who wants to deploy money in the market. He may go piecemeal, one need not go, completely whole hog at one go. They can go in piecemeal, but I think the starting point should be today, after this a very healthy correction which has happened.
Perfect. So you already spoke about ENVI, and you were one of the few fund managers who identified the manufacturing trend back in 2022. But do you think that the manufacturing story is sustainable even in the current markets?
So I think so far as we are very confident about Indian economy growing at 6.5% plus for next probably 10-20 years, it is imperative that we manufacture whatever we are going to consume here in India. Economy which keeps consuming but does not manufacture things on its own is bound to go European way, right? Today, if you look at European economies, the biggest problem is creating jobs. The biggest problem is about the flow of money, right? People today, probably nobody wants to invest there, right? If India were to grow at 6.5% on, or rather 6.5% plus on yearly basis for next 10-20 years, we are bound to manufacture all these things on our own. I'm not saying that we will go China way. Whatever China achieved in next 40 years, probably it will take us 80 years to achieve. But if we continue to change things on margins, right? If we continue to improve on what we are doing this year versus next year, probably year after that or year after that, manufacturing is bound to grow leaps and bounds for at least next probably 20-30 years. There is no way we can sustain 6.5% growth without manufacturing what we consume here in this country. I think this government has been quite cognizant of that fact. When we started ENVI in 2020-22, in fact, the seeds of ENVI were sown probably a year even before that, right, in 2020-21. That point of time, there was no talk about Atmanirbhar Bharat. There was nothing about PLI scheme, right? But we still took that bet. We took that leap of faith that if the government is talking about India growing at 7% plus for next many years to come, we are bound to announce policies which are benevolent for manufacturing, right? And that's how it has happened. So I think I'm very sure, I would say, I can stick my neck out and say that for next probably 20 years, we will continue to invest in manufacturing capacities across the board, whether it is electronics, which it can be, or whether it is even renewable power, equipment which we use in some of the sunrise sectors, to as mundane or as boring as cement, right? Or right from probably semiconductors, which is today the buzzword, to as boring as steel. We are going to continue to manufacture these things in India, and I'm very certain that ENVI is going to continue to make money for our clients for at least next 10-20 years.
Right, so that's a lot of sectors you mentioned and a very realistic perspective. But in your recent interview with Money Control, you mentioned you're bullish on AI, automation and digitization. Your perspective on these sectors?
Sure. So if I look at manufacturing itself, let's go back to manufacturing. If I were to establish a manufacturing facility which is cost effective versus any competing country that I can think of. Today, if I want to use an iPhone, obviously I have an option to have an India-made iPhone. But tomorrow, if China is producing cheaper or significantly cheaper, there's nothing on Apple's side. They have an obligation to manufacture in India, right? Today we can do that because we have implemented a lot of automation, a lot of mechanization, a lot of things to do on digitalization, whether it is in manufacturing, in retailing. Every part of supply chain we have been investing in these things. Not only does it have a positive bearing on the software side here, but there is a lot of hardware which is also involved in this, right? If you want to manufacture something to do with automation, for example, those softwares run on those semiconductors, right? They run on those chips, right? And if you're going to manufacture those in India, I think that also benefits. So I think we cannot have a cost effective manufacturing today in India if we are not going to focus on automation, artificial intelligence, machine learning, or digitization, right? And in which case, along with manufacturing, and if you look at today in India, we have enough brain power than any other country in the world to implement this. So I think we are going to continue to invest alongside manufacturing a lot of this sunrise sector, and they are in a way beneficial to also manufacturing as such, because like I said, cost-effective manufacturing will need an automation.
Right. Can you give us a quick roundup on the ENVI performance in the recent times?
Sure. The published numbers are as of December 2024. As of December 2024, we delivered about, for this financial year, about 21% TWR, which outperforms the benchmark, whether you look at in terms of BSE 500, which is the assigned benchmark, or Nifty India manufacturing sector, which is again where we could benchmark ourselves with. We have outperformed both the benchmark by a significant margins. It's in a high single digit number, right? So that's the kind of outperformance that we have created in this financial year. Since June 2022, when we launched this strategy, we have delivered about 28% TWR, for our clients. Again, if I compare with BSE 500, which is the underlying benchmark, the outperformance is in a fairly high single digit, right? So this should be now almost about 32 odd months that we have been running this strategy, and we have outperformed even since inception on quite handsome basis.
Wow, great. So the top 5 winners of ENVI are already there on the website. What are the trails of growth that you're eyeing from the next 2 to 3 years horizon?
So overall, in terms of sectoral location, we will more likely than not continue to be where we are. So auto ancillary, capital goods, pharma CDMO, and that followed by building materials. Rest of the weights can be assigned to multiple other sectors. A lot of people sort of think that if it's a manufacturing focused strategy, it looks more like a thematic. I would like to sort of give you a highlight here that within the manufacturing, we have invested in 9 odd sectors. Still, we have about 4 or 5 more sectors where we have not invested until today because we don't find value there. But within manufacturing, I can actually invest in 14 odd industries under the umbrella of manufacturing, right? So these 4 are going to be the core theme area for us. Like I said in my opening remarks, I still do believe that after a lull which happened because of elections in the first 6 months of this year, capex cycle, both private as well as public, is going to bounce back in H2 of FY 2025 and continue on the same path in 2020-26. If we believe that if we are going to consume at 7% growth rate for next 10-20 years, we are going to manufacture all this in India. We will need capex on continuous basis to be invested in capacities for next 20 years, right? What are we going to consume? Like I keep talking to my colleague Manish in his India's next decade of growth strategy, we have moved from roti, kapda and makan to butter roti, branded kapda and bada makan, right? And we are going to consume auto, which is one of the aspirational products still here in India. We are going to consume a lot of consumer durables or white goods again. Some of them are aspirational products in India. And so that's also going to be a focus area for our strategy. And like I said, bada makan, right? So a lot of Indians are going to move from smaller to bigger dwelling units. Some of them are going to buy their first dwelling units. So I think building material is something which is finding a decent place in our portfolio. So that's going to continue. Where do I see more and more opportunities opening? Our auto ancillary space actually had only domestic push last year, or let's say FY 2020-25. A lot of these are export driven companies also, and they could not find growth in US and Europe in 2020-25. I think given the cyclical nature of those economies also, 2020, 26, 27 are going to be probably better years for them. And that's when new growth opportunities open, right? So that's also going to be one of the focus areas for us. So I think sectoral allocations might remain pretty much plus and minus here and there. The stocks might probably change, but that's going to be the focus area.
Perfect. Thank you, Kashyap, for these insights. But I'm going to end this with one philosophical question. What is going to be your mantra for investing in 2025?
So you want a more of a financial answer or more of a philosophical answer?
Philosophical answer.
Okay. So I think these are the times, when the markets are correcting, there will be, doomsday tellers, they will come to you and say that, Nifty is going to go to this level, that level, my charts are showing X, Y, Z level, this is the support, this is the resistance, all noise will surround you, right? Similarly, what happened at the time of COVID, right? Everybody used to say that, the world, we as a world are going to sink into, abyss which we would have never thought of. We bounce back, right? So at times like this, if I were to be philosophical, I would say cut the noise around you and focus on data, right? I would say decide who you want to read, right? Who you want to listen to. Like I have my own, over a period of last 20 years, I have now known which are the people I am going to read, which are the people I am going to listen to form my opinion, which is the data point that I am going to look forward to when I decide my opinion. So my advice to everyone is that cut the noise around you, focus on those data which comes every now and then. Look at how things are changing on margins, right? Whether they are changing for good, they are changing for bad. The markets have already corrected. There is nothing you can do about it, right? I mean, it's a fact of past. It's a fait accompli, right? You can't do anything about it. The only thing that you can do today is to decide whether it is an opportunity to enter into the market or wait or exit the market. And that can be decided only by the data which comes in and how does it impact you on the margins positively or negatively. So decide who you want to listen to, decide who you want to read. Every opinion, every email that comes into your mailbox, you don't need to read them. Everybody who comes on the TV with their opinion point, please do not listen to them, right? In fact, you don't find me good, then don't listen to me either. But I think you need to decide who you want to read, who you don't want to read, who do you want to listen to, and most importantly, who you don't want to. That's the most important part, which helps you to cut the noise and focus. And our ancestors have told us, right? This is the proverb that they have told us, that suno sabki, karo apne man ki. I think that's the mantra.
Right. So cutting the noise in these markets, that's the mantra. Thank you so much, Kashyap, for joining us today. And thank you, friends, for watching. For more insights, market sectors, keep watching us. Until then, happy investing.